Hey everybody, happy Friday. It is Matt from People's Mortgage. Just doing a quick video for you to give you some updates on the market and some products here. But before I do that, I want to wish all the mothers out there that are seeing this video a very, very happy Mother's Day. I know as a husband and a father of 4 children that we put you guys through hell. So take advantage of your day. I hope you get all that you want, can do everything you want to do that day. You guys deserve it. So happy Mother's Day. As far as the market, we're still kind of seeing what we've been talking about for weeks. Sounds like a broken record. We're seeing days where the market spikes, days where the market dips. So as always, what I'm doing is we want to avoid those spikes when we're thinking about locking in a rate in for our clients and take advantage of those dips when they come around. Clients know, and I tell them all the time, when we lock a rate in, we're essentially locking in our ceiling. We do have a renegotiation policy here at People's, which allows us to renegotiate the rate for our clients if they drop by at least 0.25%. So if we lock a rate in at, say, 6.75%, and then in between the time that they ratify and the time they close, we see rates drop down to 6.5 or even lower, I'm able to renegotiate that for them. It's not going to cost them anything for that. We can do that one time. So it's not a bad idea. We take advantage of the dip. We get them locked in, secure that ceiling for them so they know that essentially it's a worst case scenario, but we can still get that lowered for them. Again, no cost to the buyer. So if you've got clients that are concerned about that, let them know that we got them covered for that. One thing I want to remind you guys about, FHA. I sent an email out a couple weeks ago. They are changing their policy on status of residency. They will no longer allow anyone who's not a U.S. citizen or a non-permanent resident alien to use FHA financing. So for all case numbers that are pulled on or after May 25th, so just in a couple weeks here, they're not going to be able to get FHA financing if they're not either a U.S. citizen or a non-permanent resident alien that they can prove. Again, if you've got clients that kind of fit that realm that have been looking to do FHA financing, I would highly encourage them to do their best to get ratified and get that case number pulled prior to that date. For any clients, they reach out to you that have a current FHA loan, they're going to be fine. They can still do a refinance because it's not a quote new case number. So they're fine. It's just for new case numbers for purchases that are going to be impacted by this. If you are someone who likes to work with investors or would like to work with investors, you need to check out the DSCR loan that I can do for investors. Some of you may have already done those with me, but basically this loan is an ideal loan for an investor looking to buy an investment property because all we use to qualify them for the purchase as far as income is the potential rent payment that the appraiser indicates on the appraisal. So we take the rent payment the appraiser tells us, compare it to the projected monthly payment. As long as that ratio is 1-to-1 or higher, we're in good shape. There are a few exceptions where you can have a ratio below 1, but ideally we want to be at 1 or higher. That's going to give us even better pricing for rates as well. So again, a lot of investors, they may have multiple leases, crazy tax returns. This is an amazing loan to avoid having to gather all that stuff together. All we do is get the appraisal with the rent comp, compare it to the projected monthly payment, and that's it as far as income goes. Of course, we still verify the assets to verify the down payment, but the income verification is super simple. It really is amazing how simple it is. So keep that in mind if you have any investor clients that can use that option. I'm also going to attach a flyer to this email that will give you a guideline as to what FHA appraisals are looking for and what to kind of watch out for that might cause a hiccup when the appraiser goes out there. It's pretty much the same for VA loans as well. VA is the king of the gray area. They don't really like to put anything as a matter of fact in their guidelines, but you can pretty much follow this FHA sheet for VA appraisals as well. Essentially, they're looking for their safety issues, exposed wires, railings. We know, we've been through that. But the sheet attached to the email here gives you a good idea of what to expect and what to watch out for if you know your client's going to be using either FHA or VA financing, as you tour a house. What might want to get maybe fixed up before the appraiser goes out there, just to avoid needing a final inspection. Lastly, we are seeing more and more clients take advantage of seller concessions with a temporary buy down. If you saw my last video, you saw how a buy down could benefit a buyer more potentially than a reduction in sales price from a listing. So if you've got clients that are trying to manage their monthly payment with their purchase, using seller concessions to help with a temporary buy down may alleviate that concern for them and help them be more comfortable in their monthly payment. So hope you guys all have a great weekend. Again, happy Mother's Day to the mothers out there. Please remember that we are still doing the VA promotion where we're giving $2,000 to our veterans for either closing costs, or if the seller's covering all closing costs, we can use that $2,000 to reduce their rate a little bit. So for all your VA buyers, I'd love to talk to them and earn their business. Have a great weekend, and I will talk to you all soon.